Buying investment property in a family trust is incredibly common, yet most investors do not understand this completely. In this video, I am going to share with you what is a family trust, how to set up a family trust, and a step-by-step process on how to buy an investment property into a family trust, also known as discretionary trust. So if you are interested, then stick around. Okay, so what is a family trust? A family trust is a separate legal entity where you can buy and hold assets. Just like you can buy assets in your own name, you can buy assets in a family trust as well. There are 6 items that you have to understand. Trustee, who owns the trust. A trustee can be an individual person, that is you or a company. If the trustee is a company, it's called a corporate trustee. Trust is where a set of rules are written. A trust must have a trustee. Beneficiaries are those who are benefit from the trust. This could be you or your spouse or your kids or your company as well. A settlor is someone who initiates the trust. Settlor has one-time task. After the trust is formed, the settlor has no other duty. Generally, your accountant or a lawyer will be the settlor. A director means the person who is in charge of the company or is also called as a corporate trustee. If the trust is an individual, then there is no director. Appointed is someone who appoints the trustee. This has to be a person and generally someone who are closely associated with, because this person has the supreme authority in the trust. Appointer can appoint a new trustee and the old trustee will have no control in the trust. Here is another representation of the trust. Remember, trustee owns the trust, settlor settles the trust for the first time, and an appointer will appoint a new director or change the trustee if required. Beneficiaries get the benefit out of this trust, whether it's an income from the trust or is a profit from the trust. Just like the human body cannot exist without the head, a trust cannot function without the trustee. As you can see, the director of the company is you and you are also the beneficiary. Trustee controls the trust and the trust distributes profits to its beneficiaries. It is solely trust discretion on who gets how much distribution, which is why it is called a discretionary trust. Our beneficiaries have no say on who gets how much distribution. Remember, the trust cannot distribute losses, which means the loss must be quarantined within the trust, which will be offset against any future income. Loss needs to be funded separately as loan to the trust. Okay. So hopefully you got a good understanding of the trust. If not, then watch this section again and again. Now let us look at the formation of the family trust. First thing is to decide all the items that are mentioned earlier, which is the trustee name, trust name, settlor, appointer, etc. And then provide all these details to your either accountant or a lawyer, because it's a legal entity and it's always better to engage a lawyer or your accountant to set up this trust. Corporate trustee is always better than the individual trustee as it has a better asset protection. Your accountant or a lawyer will also ask you to sign few documents, and once you sign all these things, then the family trust will be formed. You'll also get the trust deed, which depicts all the rules and regulations about the trust. 2 key things to define here is the name of the trust, let's say XYZ Family Trust, and who holds the trust. Let's say the company is ABC Pty Limited. If it's your family trust, it means the 3 generations up and down can be the beneficiaries. So even though you didn't mention their names, they will be the beneficiaries. In fact, it is always better to mention only one person as beneficiary, that is you, because sometimes bank will ask you to sign documents to all the beneficiaries and you don't want your 2 years old child to sign the document for this bank loan. So when the trust setup is done by your accountant or your lawyer, then the first thing to do is to open up a bank account, and the name of the bank account will be ABC Pty Limited ATF XYZ Family Trust. ATF stands for as trustee for. It's always important to use the exact name, because sometimes bank employees get confused with the trust accounts, because when a real estate agent opens a trust account for their business purpose, and that is a completely different account than the one that you are going to open for your family trust. Because once this bank account is created, then the trust is fully functional. Now that you have formed the trust, let us move on to how to buy the property in a family trust. First thing to do is to get a pre-approval in a trust name. It's better to approach the bank to get the pre-approval. Let's say you are approaching a bank for 80% LVR. LVR stands for loan to value ratio. Bank might ask you to provide additional documents like trust deeds, bank account details for the trust, etc. Because it is a newly formed family trust that does not have any money, basically an empty bank account, you have to organize this shortfall assuming 5% is the purchasing cost. That means your total that you have to pay the 20% plus 5%, 25%. And that 25% you have to pay from your own pocket, and then the money will be lent to the trust. So the bank pays you 80% in the trust, and the remaining 20% that you pay as a kind of a loan into the trust, and the transaction settles. Here is a diagram that will help you to understand better. Vendor intends to sell the property and the buyers is the family trust. In order to buy the property in the family trust, the buyer's name in the contract must be the family trust name, which is like ABCPTY Limited, ATF, XYZ Family Trust. When a bank gives a loan in a trust name, then the bank needs a guarantor to sign these documents. Guarantors are generally the director of the company, and it could be some other person as well. Bank mortgages is held in the family trust name. Conveyancer will register the property into the family trust name and settle the property. Once the property is settled, rent comes into the trust account you opened earlier, and the expenses will go out of that account, and any shortfall at the end of the year needs to be paid by you, and the further loan to the trust or any surplus must be distributed to the beneficiaries at their marginal tax rate. Every year your accountant will ensure that the trust tax return has been submitted and any ASIC fees that must be paid to keep the trust compliant. Hope you got a good understanding of the family trust. You know that you don't have to know all the legal terms, nitty-gritty of that, as long as you understand these basic things as I have just explained, and making sure that you can set up trust and you can buy property in the trust. That's all it matters. Also suggest to watch this video again and again, because some of the terms that in one time you might not be able to understand, but if you watch it multiple times, then it will give you kind of an idea of what are those terms are. Also ask questions to your accountant and make sure that you get a good grasp of how this gets set up. If you find these videos helpful, then consider liking this video, subscribe my channel and turn the notification bell on so you get to see more videos like this, and it will also help me to reach out to more people like you. Thank you so far for watching, and I'll see you next time. Bye-bye.